This week we have Hedera making massive moves in the RWA space. An HTS token is skyrocketing because of $1 billion deal. There's a hackathon that's just been announced that's the biggest I've heard across all of crypto. There's a great Shark Bites for you and much more. Welcome back. I'm Brandon, the HBAR Bull, here once again to bring you the latest in the Hedera ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So we're going to start off with an announcement that came out of Verra, and it really cannot be overstated. For some context, Verra is the largest carbon registry with 63% of carbon credit retirements compared to the next closest competitor, Gold Standard, with only 20%. Verra's registry encompasses over 2,300 projects across various sectors, including renewable energy, forestry, agriculture, and waste management. Collectively, these projects have issued more than 1.3 billion verified carbon credit units, with over 776 million credits retired to date. And now to what came out this week. Verra has announced a new long-term collaboration with the Hedera Foundation to accelerate the development of next-generation digital tools to enhance transparency, auditability, and integrity of methodologies and monitoring systems in carbon markets. The collaboration was announced in Senegal at an Alcott mangrove restoration project, the first project to benefit from this Verra-Hedera collaboration. As you might remember, Alcott pledged 500 million tons of carbon credits to the Hedera Guardian ecosystem just last year. The CEO of Verra said, "This collaboration represents a significant advancement in Verra's digitization strategy, enhancing our ability to deliver more efficient, transparent, and scalable climate action. Integrating Hedera's Guardian with the Verra Project Hub represents a meaningful step towards improving the way we serve our stakeholders. I'm also excited that Alcott ABC Mangrove Restoration Project is with us on this integration, an important nature-based solution rooted in Africa, a region that is critical to the future of climate finance and climate leadership." Securing this partnership with Verra essentially allows Hedera to capture most of the carbon market, and it's a pretty impressive market. In 2025, it's about a $1 trillion market, up from about $670 million just last year. And by 2034, it's projected to reach $16 trillion. Again, Verra is over 60% of this market and has chosen Hedera to build their future credits on. Total on-chain assets across all of crypto currently sits at about $23 billion. So with this market alone, Hedera can easily become the leader and set the example for all the other markets out there. And this actually isn't the only piece of real-world asset tokenization news that hit this week. For a long time, I can only think of Red Swan as a serious player tokenizing real estate on Hedera, though I feel like I'm forgetting another team out there, and apologies if I am. Either way, we have a new entrant. StegX just announced tokenizing $100 million worth of real estate on the network, and this may just be the beginning, as the standard they're using, ERC 7518, is expected to see a pipeline of $10 billion in assets by Q1 of next year. The CEO of StegX commented, "In an environment where compliance is a key differentiator, our collaboration with ZoneX underscores our commitment to setting the highest standards in institutional real estate investments. By integrating the ERC 7518 token standard on the Hedera network, the StegX marketplace is not only pioneering a new era of asset tokenization, but also ensuring that every transaction is executed according to the regulations of the issuer. Our partnership with ZoneX fortifies this vision, providing a fully digital and compliant pathway for institutional investors to access premium tokenized real-world assets." And of course, it's going to take a while for these tokenized real-world asset marketplaces to mature and really start to get churning. But when they do, they could have a really big impact on the Hedera ecosystem. So the next thing we're going to jump into is Shark Bites. We're going to get some questions from the community answered by Rob Allen, our favorite Hedera Governing Council representative. Rob, welcome back. How are things going?
Hey, Brandon. Very, very busy week actually for me. Incredibly busy. So, which all bodes well. But happy to be back. And we've got a long backlog of questions, which I don't think we've got time to get to this week. But let's give it a great crack. And I'll see if I can do it in rapid fire.
All right, we'll give it a shot. But the first thing that I want to touch on isn't a community question. It's actually some news that came out today about Verra. Now, that's the registry body for the carbon credit markets. And I just wanted to get your take on it because I know you were really involved with that early on, and I'm sure you've been following it closely.
Yeah, and still pretty involved with some of the projects that I'm working with. it was actually overnight for me. So, there was a community call that Wes called at about midnight or something, and for me, to announce this. It's been under wraps for quite some time because, as you can imagine, quite a few parties have been needing to be lined up. There's kind of internal sign off and everything. But yeah, the announcement overnight was that Verra, which is one of the world's largest and most used standards and registry bodies for the carbon markets, is integrating with the Hedera Guardian, which is massive because that means that pretty much every carbon credit that in future goes through Verra's registry or standards body and registry has the opportunity to use the digital measurement reporting and verification DMRV aspects of the Project Guardian. Credits can be tokenized on the Hedera Guardian, and part of the vision the Foundation Sustainable Impact Fund and Wes in particular have been pushing is this kind of open sourcing of methodologies to lower the bar to projects kind of onboarding these carbon credits, not just carbon credits, it's biodiversity credits, notion of stacking credits as well. So, when you put a project together, you don't just get the carbon, you actually, by managing the land correctly, you improve habitats, you protect species and everything else. So this is a big deal. The Verra Project Hub is the place where it's being integrated, it appears. Let's do a full deep dive on it next week. And I think hopefully if we can get some of the Verra and Wes and others on the show, we can talk about it in detail. And this is coupled with Olcott. I mean, we've been talking about Olcott for some time, bringing 500 million tons of carbon to the Guardian platform. This is interlinked with that. So Olcott, a big project developer, they use Verra as their registry and standards body, and they have got some really exciting projects going on in Africa in particular, but also globally. So there's a kind of a virtuous circle here where all these parties are now coming together, and they're all delivering these projects via Verra's plugins into the Hedera Guardian. So I couldn't be more excited and more congratulatory for Wes and the team, because I know how hard this has been and how long they've been working on it. So yeah, kudos to all of them.
And Rob, I went through some of the stats as I opened my show today. Verra is over 60% of the carbon credit market. And the market is already $1 trillion here in 2025 and is expected to grow to $16 trillion by 2034. So the fact that we're getting this kind of foothold could have tremendous impacts to the Hedera network here in years to come.
Absolutely. And, the irrespective of what's happening in the US and the current administration's view of this, the rest of the world is still tracking to kind of a net zero outcome. And these markets are, firstly, they're recognizing that there's a need for these DMRV solutions and the verification and validation that is necessary to bring trust to the markets, which is exactly what the mission of the Hedera Guardian is. But also, it's not slowing down; it's accelerating. And so, yes, those numbers are definitely targets that we're kind of accelerating towards.
So a very positive development there. I do want to get your take. You already kind of told me before we started the show that you didn't know too much about it, but just to give us some context, since you are in that payments and stablecoin world, we've been celebrating the fact that we've been seeing the liquidity, the USDC liquidity on Hedera going up really rapidly. And during my last show, it peaked out at about $214 million worth of USDC. Now, we didn't know what was actually causing that, or any of the mechanisms behind it, why it was actually happening. But during this week, that has dropped down to 46 million. Now, we've seen similar things happen on Algorand and other networks as well, but a lot of the other ones have stayed stable. Now, there's also a lot of big news around Circle, the issuer, of course, of USDC, around how they're going to IPO. So I have no clue what's going on or why it's coming down, but what are your thoughts around, the rise that we saw and then the subsequent decline that we've seen, just to put it into context for us?
Yeah, I really have no idea. I mean, it's one of these things that I mean, there are obviously some big players here. I don't think this is all driven by the utility on the platforms because our decentralized applications aren't using USDC yet. I mean, apart from our DeFi ecosystem, that will come in time. So it can only be the movement of, and I've not looked at the wallets, so I don't know, the degree to which these are big chunks of movement. But I think it's to be expected, to be honest. I don't think there's anything necessarily to be concerned about. It's just the nature of the utility or the usage of USDC and stablecoins in general. So this week we might be talking about another all-time high. So I don't know is the answer.
I think just some patience, and we'll try to figure it out over time. And like we've said before, USDC and stablecoins in general are going to be a tremendous tool, and Hedera is going to have a lot of things going for it to hopefully outcompete in some of those payment spaces. But Rob, let's jump into.
And I was at a Swift conference. I was on a panel at the Swift conference yesterday, and stablecoins were pretty much that and AI, of course, were the topics du jour. They were the things that everyone wanted to talk about. So this isn't going away. It's it's growing, and it's growing at pace. The Genius bill and Stable bill and the market infrastructure bills. That there's so many positive tailwinds to the stablecoin space. We just need to see how it tracks over time.
Yeah, sure. That makes sense. So I'm going to try. We have about 20 minutes left. We're going to try to get through as many of these community questions as we can. The first one comes from Jamal, who asked a question about the governing council. Are there any companies or institutions that have gone through the approval process and have been accepted, but who simply haven't themselves announced yet?
Yes.
Simple answer. All right.
Yep.
All right. Well, this might be a lot easier to get through than I thought, Rob. So the next one comes from Kevo, who says, if Hedera were to win and be the main CBDC and AUDD backbone for Australia, what kind of TPS metrics would be expected? Same question for PHPX. What's the anticipated transaction volume on Hedera from these kinds of CBDC and stablecoin use cases where whole countries are involved?
Oh, I mean, it's simply impossible to predict that. I mean, we have payments metrics here in Australia, of course. AP Plus is the payments operator for all the payment schemes here in Australia. But it depends, right? It depends whether we're talking about retail payments, card payments, account-to-account payments, whether it's micro payments. But we are talking in the order of trillions probably of payment interactions over time, certainly billions, and the amount of value. I mean, you're just looking at one metric, TPS. As we've said, there are plenty of other metrics which better reflect the health of an economy, the health of an ecosystem such as this, and the platforms. These are big numbers. We could segment by retailer. We could segment by interaction type, such as in-store or online. We could segment by payment initiation type, whether it be a QR code or whatever else. So we're not going to go all in immediately, but I imagine that there would be a foothold in some of those segments, and then we grow out from there. I mean, in Australia, we've got a very robust and well-established faster payment solution called the New Payments Platform, MPP. So there's no burning platform here. One of the challenges, I think, for people like me is actually establishing that foothold where there is no burning platform. So you need to look to new markets. You need to look at, to kind of threat modeling, what happens when stablecoins, are taken. USDC, for example, is taken by merchants in Australia, which, feasibly could happen. So there are all the sorts of things that we need to look at to establish where first to get started. But that's just Australia. It's an economy of 27 million people. Bigger economies, with different economic approaches, I guess. Some are far more focused on online sales. Some are far more progressive in their use of these new financial instruments and payments methods. So it's really difficult to model these things. And then, of course, the drivers are different per nation state. We've got fairly low cost of payment because we've got these new payments infrastructures, traditional payments infrastructures. So the drivers for change are different. If it's the reduction in the cost of unit payments, then that's a great driver for networks like Hedera, of course, which are super low cost. But payment systems tend to be collaborations between multiple parties, banks and payment service providers and merchants. So, corralling all of those to actually make the changes, it takes time to. And it also obscures, I've been in the payments industry for over 30 years. Usually my first question I ask of any new client is, in this country, what are the unit costs of payment? How much does it cost to get, one payment from account to account or from merchant to account? Mostly it's not known because there are too many parties in between. They're reducing costs. Some of it's absorbed by, within the business models of the participants in that value chain. So it's very difficult to know how you're driving down the cost of payments or where you're focusing or targeting that reduction. And that obviously leads into the use cases that you're deploying first. So all of these things contribute to, when you're looking at systemic change, overlaid with financial service provision, overlaid by risk and regulation, the business cases for these use cases are quite challenging. But as the questioner asks, volume is one of those criteria.
Well, Rob, one of the things that I think about with this is I do believe that all of the transactions that we're talking about, you don't want to just take the ones that we have right now and say, this is how many transactions are done, and this is, what we could aspire to get to. I do think that DLT is going to capture all the current market share as far as those transactions, because when you have something like Hedera that's 1,000 times more efficient than the traditional rails, you're going to eventually replace those things. But what's exciting to me is the fact that we're going to have all these other use cases that are made possible when things are that much cheaper. So you're going to have things like micropayments, like we've talked about significantly on here, or transactional Internet of Things, or smart cities, or whatever that may be. That's when we can see the real exponential growth in payments in general. So we're not looking at, payments that are being made now and just following the economy as they grow, but the fact that we could bring on so many more transactions.
Yeah, for sure. And it will probably come over the top, right? Yeah. It won't be the incumbents driving this change. It'll be the innovators and disruptors that we are seeing right now, doing just this. And then the incumbents will have to, race to catch up or, face into an existential threat. So, it's certainly really exciting times, and with this growth and these stablecoin tailwinds and everything else. Stablecoins become, it was always a spectrum of things rather than one specific type of use of the technology, depending on how stable the coins are and how they are backed. But now we're talking about tokenized money market funds that are yield bearing. We're talking about retail CBDCs, although less so on the retail CBDC side. The range now, tokenized deposits is another form of this kind of digital money. Such a plethora of different types of digital money, and such a plethora of different ways of making payments and taking payments. Something's got to be in the middle. Something's got to coordinate and corral and interoperate and interconnect, because they'll be on different chains, they'll be on different providers, different countries under different jurisdictions. These things have to be. They're going to have to be a few real disruptors to actually move this forward, and then everyone else will race to catch up or kill it and try something else. But very exciting times.
All right. May you live in interesting times. Rob, I can't believe it. We're almost out of time here, but I'm going to try to fit one more in here. It comes from Quasimodo, who says, there's lots of news about RWAs being tokenized on Hedera, but the transaction data doesn't move much. Does the tokenizing process produce transaction fees? Are there no transaction fees until the RWA tokens are sold or redeemed in some fashion?
Well, it's not a high volume use case. It's a real world asset tokenization until we get to a point where maybe we have, buildings that are REIT type use cases where we've got massive fractionalization and lots of trading of those fractions. And even then, that's not really high volume. So where we are, I think, in the kind of the maturation of real world asset tokenization use cases is merely the tokenization of a real world asset. That's kind of one transaction, or just a handful of transactions if it's follows the normal life cycle of tokenization, issuance, settlement, and then something held in one's wallet or whatever. You're not trading them 3-4 times a day. You're not actually, and haven't got massive scale yet on these tokens. So I don't think you necessarily see it, and it wouldn't actually make any difference at the moment to the TPS. I think over time it certainly will. The other thing is things like carbon credits tend to be issued and then purchased and retired almost immediately. So again, it's a very short life cycle, and you don't get lots of ongoing traffic because of it. It will add to the TVL. It will add to the total value represented, and things like RWA, XYZ should actually start to track and reflect these tokenizations. But in terms of TPS, at the moment, I think it's very low.
Well, one of the things, Rob, along those lines is the carbon markets aren't very mature yet. So we don't see a lot of trading, but just like I was saying before, it's $1 trillion market now, projected to go to 16 trillion by 2034. We could see, high frequency trading getting involved, whatever it may be. What you're talking about is what we're seeing now. But as that market matures, we could see a lot more activity.
For sure. And I think the global, across all asset classes globally, it's about 300 trillion. So, there's I think it's 280 trillion or something last year, that, depending on which report you read. So if you believe that in the future, everything is going to be tokenized, which of course we do, that's a 300 trillion addressable market in terms of value. Then you need digital money to acquire or settle for digital assets. So that's where the stablecoin and other forms of digital money usage surges. So then you've got two tokens. And then you've got fractionalization, et cetera, et cetera. So I think McKinsey recently said that they expected 2 trillion, base case, 2 trillion of assets on-chain by 2030. So that's 2 trillion of 300 trillion. There's still a long way to go. I think that's a pessimistic case. I think it's actually accelerating faster than that. These won't all be on the same chain. So, of course, you've got cross-chain movements. You've got the movement of liquidity around in order to get to the chain in which you're going to acquire the asset. If you think about, I think Dubai alone has about 2 trillion assets under management, and they're planning on 50% of those to be on chain within a similar time frame. I think 2033. So this is a movement that is only accelerating, and the tokenization of assets has to be coupled by the growth in the liquidity required to do that. So going back to the earlier question about USDC on Hedera, we're only starting. We're only literally at the beginning of this particular journey. At the moment, there's very little to do with USDC. I mean, maybe a cross-border payment or some DeFi activity. But when these massive markets start tokenizing, as they are right now, real estate and bonds and fixed income, and carbon and securities, etc., when all of that starts coming on chain, that's when things get super, super exciting.
Absolutely. Well, Rob, I see it is time for you to go already. I know you have another meeting, but we appreciate you coming on, and we'll see you next week.
Absolutely. And let's talk about that Verra announcement a bit more next week.
And sticking with the environmental and ReFi space, we're going to go to an interview that I did with the CEO of Dovu. There's been a lot of excitement in the Hedera space about a deal that they just penned, and we got the inside track. Today we have Irfan, the CEO of Dovu, to talk about some big news that just dropped. Irfan, welcome.
Hey, thanks for having me.
Well, it's absolutely my pleasure. To start off with these questions, let's go with a quick refresher on what Dovu is.
Yeah, well, Dovu's been around for a little while. Actually, we started in 2016, 17 on Ethereum when we first launched. We got some back-in from Jaguar Land Rovers. We had some corporate investors, which was a sort of hairy time for them when we did an ICO. to have sort of a public company sort of as an investor in the business in the really early days of crypto, of course. But I won't sort of bore you through the full history of everything. The what we do is we're trying to build and are building the trust layer, the audit trail, a usable one, okay, for anybody who wants to create a digital asset. And around that, you wrap a lot of tooling, a lot of sort of services to make that work. Whether that's fast onboarding through AI-driven workflow sort of design systems, a massive warehouse where these assets are stored and can be found, APIs that connect into these warehouses, a set of standards so people know what they're searching for. So like is for like, basically. And that's what we've been sort of building up, built on Hedera, just allows us to create this sort of super efficient, cost-effective, digital sort of landscape that we think the whole world is walking into.
Like you mentioned, you have been around for a while, so I was actually surprised that you said something that I really didn't consider when it came to Dovu, and I just want to get some clarification. So, when I think of Dovu, I think of environmental assets, but you just said assets. Are you going to remain focused on environmental assets, or are you possibly going to expand outward?
Yeah, I mean, so the way that Dovu sort of evolved really was actually we started off working, hence the investment from Jaguar Land Rover, at sort of tokenizing behavior in connected vehicles. It was a completely different sort of proposition, but it's trying to solve the same problem, which is how do you trust communication when there's sort of conversations, for want of a better term, between digital assets. We then realized we were way, way, way too early in the connected vehicle sort of space. And me being a farmer from Wales, I looked at the whole sort of carbon credit and environmental asset sort of problem and thought, wow, this is ripe, for a hash graph or a DLT sort of proposition, really, because nobody trusts it. Nobody knows, it's such an opaque sort of business. Is that carbon credit actually valid? Is it not valid? Has it been retired? Where is it? And so on. So you need that trust layer and audit trail. So that's what we focused on. And Dovu Earth was created to solve that problem. And one of the things then that sort of happens is that people say, well, if you're just going to do that with a digital asset, why does it have to be so reliant on that particular sort of sector? You could sort of do it with lots of other things as well. That's really where we've ended up, is that our system, our platform, it doesn't care what asset it is. It just takes a look at that asset and says, hey, let's have some standards around it. Let's sort of mint it. Let's create a trust layer and an audit trail. Let's build some workflow tools so that you can simplify the onboarding of it, and let get that stuff minted and published and placed somewhere. So we're seeing a pipeline of projects now that are outside of the environmental sort of space, sort of coming into Dovu saying, right, okay, we'd like to sort of use your platform to do all sorts of stuff that we wouldn't have thought of. And that's sort of leading us really down where we're sort of heading, is anybody with some expertise will be able to use our AI tooling and digitize a workflow. You'll be able to put that workflow into the equivalent of an app store, let's say a workflow app store. You'll then be able to, anybody will be able to use those workflows to create digital assets. And then you, as a designer of that workflow, will earn royalties every time it's used. So on our system. So it's a phenomenal mechanism that's just expanding every day, really. So we're really excited about where we're headed.
Well, it sounds like there's plenty of room for expansion there. So now let's get into the topic for the day. Can you tell us about the VCH Carbon Development Program that you just announced last week?
Yeah, really exciting for us. So Veteran Carbon Holding is a company based in the US. It was led by a scientist, and Stephen Gorton, and he's been working on the science behind a product that has been rolled out to farmers in the Midwest initially and in the USA. And that product increases the yield of the crops and increases the amount of carbon that gets stored as a result of the yield in the crops in the soil. So it sequesters carbon into the soil, improves the soil health, and actually delivers a increased yield for the farmer of between 6 and 8%, for the crops themselves. And it's not using chemicals. So they've been working on that for a number of years, doing all the soil samples, all the soil testing. And then they went to an organization called B Carbon. B Carbon are a spin-off out of Rice University in Texas, and they're a not-for-profit organization that focuses on the science, the testing and the verification and the methodology. So you look at it from a workflow perspective. Stephen creates the IP and the technology. He then contracts with the farmers who own the land or managing the land. He then does the soil sampling. A third party comes in and says, hang on a minute, do we believe, what these guys are sort of saying? We need to do this test. We need to map out the methodology, and then we need to certify it. So that's what B Carbon do. They certify it. And then they say, oh, actually, what do we do with it now? Well, actually, Dovu's got this phenomenal platform where we can sort of digitize and create the trust layer of all of this carbon that's sort of being created. They've built a warehouse that can house it. Imagine Walmart, and we've got loads of shelves, and we're putting those carbon credits into those shelves. And then there's APIs that access this sort of warehouse, this digital warehouse, so that any demand partner around the world who wants to sell these credits can plug into our warehouse and sell them. So it's a sort of, that's the sort of business model. So far, what's happened is that they've contracted about 2 million acres of land across the Midwest, and other territories in the US. And we've signed an exclusive contract with them, so that for the next 9 years, all of those credits will be coming into our warehouse. And they don't all come in at once. They come in at sort of various points, and I'm happy to go through sort of how that works. But what's important to state here is that this press release, this announcement, is veterans' announcement. So it's their farmers with V Carbon backing it up with their science and their knowledge. It isn't some sort of crypto announcement on some nonsense number that sort of gets pushed out there. This is us managing, their credits that come through into our warehouse and make them available to be sold. So we're really excited about what's happened in there. And I don't know if you've got any questions on that, but I can sort of, enhance that a little bit.
I do. Well, the first thing that I want to say is that it's a hard sell to get a farmer to reforest, the fields. I mean, that of course they aren't going to get any income from that besides whatever they might get from the carbon credits. But it's not hard to sell a farmer on getting higher yields. And if you get higher yields and you can get these carbon credits and get some revenue through that as well, it seems like everybody's interests are aligned. Do you want to expand on that?
Yeah, it's really, really good point. As a farmer, son of a farmer myself, the debate within the farming community right now is how much usable land do you give up to meet environmental goals? How much land do you give up which actually can grow something, whether that's livestock or whether that's crops, to put a tree on, or to rewild in some way? When we've got a massive problem in the world really on feeding everyone in a sort of affordable way. So it's a real challenge. The other part of it is that farmers are under massive pressure right now, with whether it be tariffs or whether it be cost of living or whether it be whatever that is. These family farms are really, really struggling. So what we've seen is that the family farmers are a lot of them are leaving the business and corporates are moving in, and there's more corporate farming. And what really farmers want to do is they get a huge amount of pride in feeding people, and the crops that they create. So you're absolutely right. For us to, work with partners like veterans, to be able to go into farms and say, hey, you can stay on your farm and you can earn more. You can stay on your farm. Not only can you earn more, but you're also helping the environment. You're doing that as well. And you've got another crop to sell. This crop now is called carbon. So you've got the core crop that you're selling or using, and then you've got carbon as well as an additional revenue source. And it's that additional revenue source, that's so important, to farmers, because they want to do what's best for the environment, but also they're a business, so they need to make profit. So I'm really excited about that, and I think this 2 million acres that we're talking about is the first sort of part. We've got projects in our pipeline for Australia. We've got projects in our pipeline using the same technology and using the same sort of partners. And we've got projects in our pipeline across America as well, which are sort of lining up. And then also in Europe. So we see this as very much a sort of a long-term, hugely valuable to all stakeholders sort of project.
So the next thing that I want to touch on, you're talking about some big numbers. You're talking about 2 million acres. The number that I think caught a lot of people by surprise was $1.1 billion worth. And it sounds like you have a lot more business on the way. When do you think these carbon credits are actually going to start to hit the Hedera network?
Yeah, so the way that it works is that you sort of take a baseline of the carbon that's sitting in the soil, and then you measure it over a period of time. So the first thing that you'll see on the network will be about 186,000 acres of farmland that'll be first coming in, and we expect that to be coming in imminently. Those 186,000 probably will equate to a ton of carbon per acre. And again, that's a sort of a baseline number. The numbers that we're seeing from the scientists is that within each acre, you could sequester up to 5 tons. But what needs to happen is that you take your baseline and then you measure it again in sort of normally 12 months' time. In 12 months' time, you then see what the balance is between the 1 ton that you've been awarded as a credit, by the verifier, in this case, B Carbon, and the actual amount, which is expected to be, let's say, 5 tons. And then the extra 4 tons then get dropped into the system. So what you're going to see is a cumulative effect over a period of years, building up and building up and building up as the soil gets resampled, as the carbon becomes available because it's credited and verified, and then it comes into our system and then sort of builds and builds and builds. Don't expect 1 billion tons, or $1 billion sort of to happen, overnight. That $1 billion for those 2 million acres is reliant on 2 things: the cost of carbon credits, because it's linked to a number, the price per ton, and also the speed of the testing as it sort of goes through. And I think that the 1.1 billion is actually quite conservative based on the science.
Well, one of the things when it comes to these carbon credits is they're only worth how much they're trusted, right? And with something like Dovu, the trust is increased, so the value can increase as well, right?
Yeah, there's 2 levels of trust here, really. The first one is, let's assume that nobody trusts the producer, because they're just selling something. Okay, so what you then need to do is have this verifier that sits there, and this is why B carbon is so important. It's the B carbon; they're the scientists, they're the ones who've got the expertise, and that's why it's taken sort of, I think it's 3 years. Stephen's been working with them to get them to a place where they go, right, we now know that the science is sound. It's been tested. We've got the soil sampling over a period of years. We know what the baseline is. So the trust comes from B carbon. Where Dovu adds the trust and is in the audit element that sort of basically says, hey, when was this soil sampled? By what lab? What were the test results? What was the name of the lab? You could even drill into the lab technician if that was the case. Put that. Let's stamp that. Okay, on the chain. That's stamped, verified. When did it go to B carbon to be checked first? Stamped by them. When did it leave B carbon to go to Dovu? Stamped by them. And then and where is it now? Is that credit being purchased, or is it still in the warehouse? Has that credit, even though it's been purchased, hasn't been retired? Because some people will buy credits and hope they go up in price, and then they'll sell it further down the line. So where is that credit in the process? That's such an important thing, because you can't then double spend. You can't sell the credit twice. You always have a track as to where those credits are. And so what we do is working with Hedera on their open source product, The Guardian, which we work very closely with. We're able to track that all the way through, and we do that as a non-fungible token. So that token, that credit, can't be fractionalized. It can't be, distributed anywhere. We know at any one point where that 1 ton actually is. So yeah, the trust of the technology, the trust of the verifier, the trust of the audit trail, underpinned by the trust of Hedera, creates a more valuable asset.
I was going to ask. I'm always concerned about the sustainability of the businesses that are being built on Hedera. Are they going to have significant revenue to be able to continue their operations? It sounds like Dovu is doing really well in that part of things. So I guess my question is: you have the supply taken care of. It seems like you have a really high quality product in the carbon credits themselves. How are we looking as far as the marketplace and the demand for these credits?
Yeah, that's the billion-dollar question. Somebody has to buy them at the end of the day. And I think what we're seeing is a market that is in flux right now, whether that's through political means or sort of fatigue with what's happening. But this is a market that's you're flowing downstream. You're going with the flow, right? This isn't going to go away. Companies, organizations need to manage their carbon output in whatever way that is. And the best way of managing their carbon output is to reduce the amount of carbon needed to produce whatever they produce. That's the best thing. But obviously, there's going to be the leftovers, the carbon that is unavoidable. So the incentive, which is going to be carrot and stick by governments and by other incentives sort of put in, is that these organizations need to balance the books. And there's definitely no doubt about that. So where we're at right now is that there isn't really enough quality carbon out there for organizations to balance their books. And this was before AI. The amount of carbon that is being produced right now for the AI landscape that we're in is unbelievable. The amount of energy needed to actually, fulfill our AI dreams as they sort of go forward. So our business model is really simple. We go after corporates. We create simple ways via APIs and others things for corporates to connect to our supply. And one of the beautiful things about being part of Hedera, of course, is that they've got a healthy governing council, which is full of corporates. As I mentioned earlier, our first investor is Jaguar Land Rover, who's owned by Tata, who's just happens to be on the governing council as well. And anybody who looks into the Tata group of companies or family of companies will realize how much carbon they're going to need to purchase in order to balance their books. So I think the first thing is you build a quality of supply, in a market that is growing and inevitable. Nobody sat there saying, hey, I want to give you $10 million, $20 million, $30 million, go and find the supply. You really do need to get that sort of supply right first. And that's always been a challenge as well for producers, because how do they find the capital to actually start creating this sort of quality supply? So there's a lot of moving parts to this, but we're not concerned about the demand, but we're also not sort of stupidly optimistic. That's not Dovu's style anyway. It's not my style. We build something that sort of hopefully makes sense a year from now, and may not make sense today. That's been the whole thing of Dovu, is like it's bringing carbon credits on chain, many years ago was seen as like, what's the point? I think it's going to become inevitable. So, and also there's demand points where we don't even know yet. So one of the other things about creating a digital environment for carbon credits and enabling APIs to connect into this warehouse, there won't be humans looking for these carbon credits. They need to be searchable. They need to be found. They need to be identified, based on their sort of the data around those sort of credits, and then they need to be acquired. So again, you're building something that makes a whole lot of sense in an agentic, future, when people want to go and search for credits that meet certain criteria, that meet their corporate goals, that they then can go and purchase. So yeah, lots of reasons why we're optimistic.
All right. So to wrap this up, I'm curious if there is an entity out there that would like to purchase these credits now or in the near future, how would they go about that?
Yeah, just get onto our website, Dovu.earth. There's plenty of contact points on there. Reach out to me personally. I'm easily found. There's not many with my sort of crazy Welsh name. So Irvin at Dovu.earth, just sort of reach out to me. But yeah, we've got some great tools as well for developers that want to sort of start using our API, or using our endpoints, looking at our workflow engines. There's plenty of content out there. And Matt Smitty's our CTO, is very easily approachable. And I can promise you something: if there's any developer out there that wants to talk to Matt, they'll leave the conversation, better off than when they started.
There's no question about that. First of all, and for congratulations on this development. This is huge news. I appreciate you coming on and telling us about it. And of course, thank you for building on Hedera.
Thanks very much for having me. Really enjoyed it.
So I have a couple other interviews a little bit later in the show, but I wanted to cover some other Hedera news and events that definitely deserve some coverage. Charles, the CEO at the Hedera Foundation, discussed one of my favorite applications for Hedera, and that's micropayments on Benzinga. He highlights that Hedera-powered micropayments on social media platforms to compensate creators eliminates centralized intermediaries. Of course, Galaxy has been doing this for a while now, but Charles also mentions Hedera's participation in bids to acquire TikTok and goes on to say, crypto and DeFi work best where ATMs don't. In volatile currencies, a stable token delivers predictability. For many users in South America, losing 10% of their paycheck daily, blockchain-based stablecoins are life-changing. He goes on to say social platforms handle massive data flows and creator interactions requiring streaming micropayments. Only a predictable, fixed-fee ledger can support real-time tipping or content licensing at scale. So as you guys know, I think that payments and particularly micropayments can be a huge differentiator for Hedera, and it's good to see Charles getting out there and advocating for it. So the next thing that I want to get into is Google came out, or at least a Google representative came out this week and talked about how encryption could be more at risk to quantum attacks than we previously thought. Now, Lehman Baird, the inventor of the hash graph, which underpins Hedera, and of course one of the co-founders of Hedera, isn't overly concerned about this, but I think it's something that we need to keep a close eye on. I will say, though, that Hedera is ahead of the curve when it comes to cryptography compared to a lot of the other networks out there. And this was highlighted by David Indarius. He is one of the builders in the Hedera space. He put out a post saying, "Choose Hedera, quantum-resistant hashing." He was asked by a community member, how is it quantum-resistant? Sounds like a very interesting future proofing. David replies, SHA 384 and ED 25519 keys make Hedera more quantum-resistant than other offerings. And he believes that Hedera is the sensible choice for financial, monetary, and enterprise applications. And if anybody's interested to do a little bit deeper dive on this, some of the Hedera team members, including Dr. Baird, put out a blog post that has a lot more information. Moving on to some market information, Coinbase did announce that Coinbase Financial Markets launches 24/7 trading for Bitcoin and Ethereum futures on Coinbase Advanced. They're also expanding their perpetual style futures to include natural gas, silver, Solana, XRP, Cardano, and HBAR. And we also saw a new listing for HBAR on BitUnix. We also saw some things announced by some of our DeFi players. Bonzo Finance announced Bonzo token buybacks. They explained that the Bonzo buyback program that supports ecosystem incentive replenishment will utilize a percentage of the treasury revenue generated by the Bonzo Finance protocol to acquire Bonzo governance tokens in an automated fashion. The tokens acquired will fuel various community-centric programs, including single-sided staking rewards and liquidity incentives. And now they're allocating 1/3 of the current protocol treasury to strategically acquire Bonzo tokens. I also noticed that SaucerSwap continues to add features, so I'm looking forward to an interview that I'm going to do with them here in a couple weeks. And we also had what could be perceived as some negative news this week. We already talked about it a little bit with Rob, but that was the drop in USDC liquidity on Hedera. Last week, we were getting excited to see the stablecoin liquidity hitting a record $214 million worth, but this week it dropped sharply to $46 million. Now, we saw this happen across several different networks, including Algorand. Now, Algorand's didn't move off of its low, but Hedera's has started to recover. It's up to $79.2 million at the time of recording. I've seen several theories as to why this might be happening, including centralized exchanges rebalancing, something to do with the Circle IPO, market makers making some shifts, and a few others. But for now, I think we should just be patient for a few weeks and just see what happens. And now we're going to get back into the good stuff with an interview with the American Sevens Football League. They're one of the teams that are building on Karate Combat's Up Layer 2. They have some really interesting stuff to say, so let's check it out. Today we welcome Center and KT to talk about one of the new leagues that are joining the up-only gaming revolution, the American Sevens Football League. Gentlemen, thanks for hopping on.
Thank you, Brandon.
Great to be here.
All right, so I'm going to jump right into this. Center, can you explain the league and why you wanted to create it?
Absolutely. So I was looking for my next venture, and I had a successful tech company, and I was thinking to myself, how can I leverage my business experience and my tech background in my next venture, but also make it as big of a business as possible, meaning help as many people as possible and reach as many people as possible. And fortunately, I saw that my old friend Ryan DePaul, who I grew up playing football with, had a recreational league in New Jersey called Town Beef, and it struck me like lightning. That was my eureka moment, and I said, together we could, to myself, I said, we could really take this thing to the next level. We can make this a major league. This thing could even become an Olympic sport one day. Just it hit me and I was on fire. I went to Ryan. I said, together we could do this, and that's what it's going to take. And so it took months of discussion, but we finally agreed upon moving forward and we created the A7FL. And the rest is history. We're now in our 11th season.
Wow, that's amazing. So what makes 7FL a little bit different than the football that we might all know and love?
Absolutely. So, first off, the obvious no pads, no helmets, but still tackle football. So, it's physical. This is America's favorite sport, but there's even a twist to it. When you take off the helmets, the players are more aware and through instinct keeping their head out of the tackle. So, you don't see head to head contact, helmet to helmet on every single play like you see in traditional football. And there are a few other key rule changes. Our special teams 3-on-1 is the most exciting play in sports, we believe. We don't kick the ball, we throw the ball. And so it is football for the young generation. This is the way I grew up playing. This is the way a lot of people are exposed to football initially. You don't have pads or helmets, but you have a ball and you have your friends. And so this 7-on-7 format, combined with all the other key rule changes, has really helped us to build a new sport, basically. And it's taken time. The first few years was, hey, this is crazy. This won't last past a year. These guys are insane. And little by little, we've gotten more and more attention from Sports Illustrated, Sports Center, GQ most recently, Bleacher, Barstool, and so on. So NFL athletes recognize our guys are the real deal. And there's so much upside. So we're providing a platform for athletes who just didn't have that opportunity to gain exposure and even to have a career in the future, another opportunity in football.
So considering your tech background, I think it makes a lot of sense. But can you tell us why the Up Only Gaming caught your eye?
Absolutely. So thanks to KT, we connected with the HBAR Foundation, who connected us with Karate Combat. And through those discussions, we found out through perfect timing that Up Only is being developed, the layer 2 platform that's going to allow companies like ours, leagues like ours, to now take advantage of no loss type of contest gaming. And so we'll be able to use their platform. And this is, I think, like an area between casino and sports betting and cash money contests and free to play. And so we are establishing a foothold in each of those markets as we move forward. And this is a perfect entry point for us. On top of that, we've developed some of our own apps, part of our partnership with HBAR Foundation and Hedera. And so as a collaborator, we are really looking forward to all of the opportunities that these partnerships and these collaborations allow.
Well, let's dive into some of those things. KT, can you tell us about some of the things besides Up Layer 2 that you're planning on doing with Hedera?
For sure. We've talked with Manu, the founder of Kabila, about like NFTs and their role in building community and getting sort of like digital assets out there related to leagues or, whatever communities they might be. And I think in our case, there is a good case for collectibles that have utility and tie into like game day advantages, season passes, and others. And also a way for maybe like our athletes to get their names even more out there with artwork and representations of them. So we're pretty excited to sort of like do some exploring with our current apps on the NFT applications, and pretty soon get collections launched on Kabila as well, and engage with the community that way. We've got lots of other exciting things that we're talking about internally too. We've talked about like the use of AI agents, and I've noticed that being talked about in the Hedera Discord, and dev advocates talking about that. So that's pretty exciting as well, alongside the other stuff we've built so far.
Excellent, excellent. So let's get into the application. It sounds like you already have an app, but of course you're going to be adding some of this up-only gaming to it and some of these other aspects. What is the app going to look like, and how are people going to be able to interact with it?
For sure. The good news is there are two components of the app that are already live right now and that people can get to. So the first is our fantasy app, right? It's like fantasy football. It's basically a points-based right now. So there isn't a token part to it, but we launched it sort of at a good time to take advantage of the second half of our season of playoffs. So it's been live for about 3 to 4 weeks. If you go to a7flfantasy.com, you can easily sign up. You can check out more like streaming videos of the league, look at the leaderboard, and on your profile, you kind of get achievements that are minted as soul-bound NFTs for now. They kind of just show like, hey, we're part of this, right? And we're experimenting with that and getting the word out and getting people on the platform. And I think that's one other way, besides watching the games live or in person or on the stream, that people can get involved with the league and start to go like, hey, I think I know a thing or two about what's going on here with these games. Then, as a sort of entertainment plus also future outreach to audiences who may not know as much about either football or padless and helmetless football like we have, or even our unique 3-on-1 format that Shenner mentioned, we've got a mini game that showcases the 3-on-1 return. And right now, the easiest way to access it is actually to go to Telegram and use the Farcade app and search for Sevens Bowl. And you get to basically experience life as one of our return folks in that 3-on-1 setting. And it's drawn some pretty good feedback. Like we internally had talked about, can we make a mini Tecmo Bowl for ourselves that showcases the league? And comments have started coming in saying, I want the Raiders Bo Jackson option. Or, this really reminds me of a Tecmo Bowl vibe. So it's fun. It's a way for us to go like, okay, how can we tweak things and introduce the sport more, engage with the community? They're giving us feedback. And eventually, we've got a grander vision of rolling these all together. And actions you take in one can kind of give you privilege and status in another. And that makes it a far more meaningful overall set of games to play for the league.
I absolutely love that. Now, you were talking about the fantasy aspect. Now, up-only gaming to this point has pretty much just pick the winner, right? Whoever you think is going to win, and if they win, you get more tokens and so forth. But are you going to wrap some fantasy aspects into that? I love the simplicity of what Karate Combat is doing, but of course, people love what they're doing with fantasy football as well. Are you going to include some of those aspects in your up-only gaming strategy?
Yeah, I think it's very much open to more innovation. We've taken sort of inspiration looking at some of the other existing things out there and thinking what syncs well with our stats platform that Shenner has built internally. So we've got pick the winner. We've got things, questions in the weekly predictions related to score line, who scores the most points and the least points, number of games that fit a certain criteria. And I think as we go into seasons in the future and integrate our stat system more, we'll have more exciting stuff that's related to in-game stats. I think there's a vision for that to do in the moment predictions.
Well, I absolutely love football. I can't wait to get more involved with this. I've watched some of the stuff that's going on with your league, and I'm looking forward to getting more involved with it. But, Senator, let's go back to you. How can people get involved with your league, both, what it's doing from a day-to-day standpoint, as well as once this app launches and the up-only gaming?
Absolutely. So we live stream and we're on multiple television partners. So you can watch us first off on our own platform, a7fl.tv. You can tune in on YouTube, so some of the obvious places. But then we're also on DAZN internationally. We're on Fox Soul here in the U.S. Be also re-airing our games on Stadium, one of the big sports streamers here in the U.S. And then we're also on Fight and Triller TV. And so with all of those avenues to watch us, you should be fine to catch us on any platform, whether mobile, connected TV, or streaming. And then, of course, you can come to any of our games. So we have multiple markets across the country. We're everywhere from Las Vegas to Washington, D.C. and New Jersey. And so some of the new opportunities are through Web3. And so that's being a part of still to be launched initiatives. And you can be a part of that and join our interest list at a7fl.com/web3. And you can join that list and be informed, especially when we'll have and get to the point of an airdrop and whitelisting for our projects coming up.
So I understand that you have a championship event that's going to be coming up here pretty soon. Can you tell us about that and anything else you'd like to tell us before we let you go?
Yeah, this is our 11th season, so a big year for us. Last year was our historic 10th milestone. And so we also saw the Las Vegas teams come into their own, so become back-to-back champions, the Las Vegas Insomniacs. And so this season and this championship is going to be exciting. We may see a first time ever 3-time back-to-back champions, or we may see the upset that everybody's been waiting for. And we'll, of course, be excited. If you would be there, we'd love for you to be there, and all of your guests. So once we announce the championship, we'll be promoting some free ticket opportunities, and tickets will be available online.
All right. Well, I hope I can make it to it. I'm really looking forward to it. Thanks for everything that you're doing. Thanks for building on Hedera, and best of luck.
Thank you, Brandon.
Thank you, Brandon.
I was going to feature an Earthlings clip. Patrick wanted to do a special one for me, but there was no Patrick commentary. So I wanted to make sure that I got some of his commentary because he posted one to X that I thought was really good. So we'll probably get that one next week. But in the meantime, we're going to go to a hackathon that was announced early this week. It's absolutely massive. It's being put on by the Hashgraph Association, but bringing capital from the outside in. We caught up with Jafar, who's the one that's managing this hackathon, to explain it. All right, so we're back. I'm here with Jafar. Jafar is with the Hashgraph Association. Before we get started on the topic for today, I just wanted to ask how you got involved with the Hashgraph Association and what you do for them.
All right, so my name is Jafar, and I'm working with DYOR Blockchain. I'm the co-founder of DYOR Blockchain, which is a Web3 hub based in Tunisia and Africa. We are in the space since a while, since 2016, and our main mission is to bring Web3 to the continent.
Okay.
I myself, I was born and raised in Tunisia, but I was living in France, now I'm living in Spain. So we're very, very connected with the Mediterranean region, basically. So we create many events, we work on trainings, we help institutions, onboard institutions into blockchain. And since 2 years now, we are collaborating with the Hashgraph Association. It has been very good collaboration. We love Hedera, we have the Hedera ecosystem, and we are trying to do our best to bring more institutions, to bring more community, to bring builders, build on Hedera, basically. So we started doing some small events, and we kind of matched. So we got introduced to the founding team here, to Kamal, basically, here in the Hashgraph, and we increased the collaboration. Basically, we had big focus on education, as Kamal has this willingness to educate, and we have also that in our DNA, as we collaborate a lot with universities all over Africa, but also in the Mediterranean region. So basically, we did well. We did great. I think as I mentioned, there is a match between what we want to bring to our communities and what the Hashgraph want to do. And yeah, that's who I am, and that's what I'm doing. So this is basically the step until 2024. Yeah.
So you mentioned that you started off with some small events. From what I heard last night at Hedera Day, you have a much bigger event that's coming up.
Yes.
Can you tell us about that?
Yeah. So that's the transition, basically.
Sure.
So since we did very good things, I was invited to become one of the regional leads at Hashgraph Association. So I'm officially one of the Africa regional lead, if you can call it like that. And I brainstormed a lot with Kamal how we can create a new event that can onboard Africa.
Okay.
And basically learn from what we did the last 2 years and make it something that can really speed up, kind of scalability of the community building that we were building. So we decided together to do what we call the biggest Web3 hackathon or Hedera hackathon. So that's the event. We will be doing the biggest Africa Hedera hackathon.
What makes it the biggest?
So what's made a good question? The biggest, first of all, is the prize pool. It's a very, very respectable one. We're talking about at least $1 million prize pool.
$1 million. I mean, we've had some big Hedera hackathons, but that's taking the cake right there.
Voila. In terms of prize pool, it's the biggest in Africa, not only for Hedera, but also in Africa. Many hackathons are happening in Africa, but not with this type of prize pool.
And growing, right?
And growing. We are onboarding sponsors, we are onboarding partners, we are onboarding many institutions, yeah. I want to come back to answer your question why it's the biggest.
Okay.
It's numbers, numbers. We are onboarding at least 100 universities to be part of this big collaboration. So we are leveraging, as I mentioned, all the activity that we did in the last 2 years and trying to leverage that to really collaborate with all these institutions in the organizational level. Because why universities? So basically you want to be on the ground with them, close to these participants, so that we can give them the needed workshops, the needed mentorship, so that they can build, help them connect, create teams, etc. So our targets is to onboard 10,000 developers this year for this hackathon, and also a target of onboarding 1,000 projects. So it's the biggest because $1 million prize pool, 10,000 developers, and 1,000 projects that will be part of this huge innovation. I need to mention that it will be happening this summer from 1st of August to end of September.
Okay.
And the prize announcement will be happening in November. So basically the event started since a while, like we are all the preparation phase, etc. And we are announcing now as we speak, we're starting onboarding partners and sponsors. So as I mentioned, after all the activities we did the last 2 years, we made this discussion with Kamal on how to scale up on all these activities. And Kamal called his partner, who is Paolo Tosca.
We know him well.
Exactly. Who is the co-founder of Exponential Science. And together they decided to kick off all these activities. So yeah, I'm like, this is huge for Africa. This is huge for Hedera. And we are really looking forward to see this go live, basically.
So you're focusing on the African continent, and you're going to have stations throughout the continent.
Correct.
But is this only for people working out of Africa, or is this going to be a worldwide hackathon?
So that's a good question. So the hackathon will be open online. So anyone, wherever they are, even on Mars, they can participate in this hackathon.
Okay.
However, we will be doing a hacking station in at least 16 countries on Africa. So basically what's hacking stations, they are places where people can come, they can have on-site mentorships, on-site workshops, they can connect. As I mentioned, as we are onboarding universities, so these universities also are providing their physical spaces where they will be connecting, etc. So we have business universities, we have technical universities, so we will work on matchmaking as well. If you don't have a team, we can help you find a team. On the ground, there. Maybe you don't find people in these physical spaces. That's why we can connect you with people from another country. I focused a lot on universities, but we are not. The focus is not only with universities. Definitely, we have startups, we have innovation hubs, incubators, accelerators that are part of this big project, and the idea is to onboard all of them to explore Hedera, and having in mind this big prize pool. I think they will definitely come.
Okay, so one of the things that I think would make sense here is we have Hedera developers around the world. It would be good to pair them up, those developers who know Hedera really well, with some of the teams out of Africa, right?
Correct.
Okay.
That's why we, on our website, we just created forms for those who want to provide assistance, who want to provide guidance. The idea is to really connect these people, try to help, support, provide the needed assistance so that we can basically help them shape their project.
Sure.
We will be doing office hours every day on Discord, on Telegram. We will be available to help If there is any question, if people have any errors, if they need any type of assistance, we will be there. We'll be there.
Okay, perfect. Well, best of luck. This is, of course, a really big initiative, between the Hashgraph Association, all the universities, and many other partners. But the fact that you've come up with the biggest hackathon in Africa and the biggest hackathon I know of for Hedera, we certainly wish you the best of luck. It's awesome.
Thank you so much.
Now, we've been talking an awful lot lately about how the HBAR could become the native currency for the AI landscape. And one of the things that could help us do that is a standard called HCS 10 that's been put out by Hashgraph Online. The thing that came out this week about it that I thought was really interesting is Neuron had a demo in Demo Day that we highlighted last week for the AI Hackathon that integrated HCS 10, and it enabled Hedera AI agents to buy one of their collaborators' weather data. And they did this all via Hedera wallet with some USDC. And I only can imagine, with all the great stuff that's coming out of this $35,000 hackathon, what could potentially come out of that $1.3 to $1.5 million hackathon that's going to be coming out of Africa. And that's not going to be the last one. I think Jafar mentioned it, but I'm not sure. There's going to be one of those, or they're planning on having one of those on every continent. So this is going to be millions of dollars worth of hackathons that are going to take place, which I'm sure are going to have a really big impact on Hedera. Okay, now let's jump into some network analysis. We're still cruising at about 10 TPS with a time to consensus finality at 2.5 seconds. There were 12,000 accounts created last week. Revenue has stayed up at last week's level of $1,700 per day, but average hourly active users dropped to below 400. Moving on to the crypto and HBAR markets, it hasn't been the best. Bitcoin is down 1.7% on the day and 4% on the week to $104.5 thousand. And alts generally have gotten hit harder, HBAR down more than most. HBAR is down almost 6% on the day and 13% on the week to 17.2 cents at the time of recording. I was hoping 18 cents would hold, but since it didn't, 17 might offer some support. If we head back north, 20 cents will be the first area of key resistance after we break through 18 cents. Looking forward to next week. We're going to get Brady back on for another DeFi Corner. We have been trying to maintain about a 2-week cadence with that, and it's been about a month, so I'm looking forward to getting him back on for that. I'm sure we're going to do a deep dive into the HUSDC liquidity and the drop that we saw there, but I know he has a few other things that he wants to get into as well. We're also going to try to get Verra, Alcott, and Rob on to do a little bit more deep dive into the Verra announcement, because I think it's going to be really impactful. I have a few other things that are in the oven. Hopefully they're going to get fully baked, and we'll have a couple other interviews for next week. But in the meantime, that's all we have. We'll see you next week.